The market recovers from Monday's fall amidst choppy trading. The Nifty is gaining over 100 points with commodity stocks leading the buying. The Nifty Bank also provides some support with a 0.5% advance. The mid-caps are outperforming with the mid-cap index advancing close to 1%.
Relief for the Indian rupee as Indian currency pulls back from recent lows of above 85.8. The strength follows global dollar weakness with the dollar index pulling back to 108.2 levels after having crossed the 109 mark last week.
The board of BPCL has given its approval for listing of Maharashtra Natural Gas, a key city gas distributor in Pune. The brokerages expect the IPO to lead value unlocking for MNGL's owners, IGL, BPCL and GAIL.
Biocon rallies over 8% on a drug approval in Japan, and Jefferies has upgraded the stock as well. ONGC rallies 4% as CLSA has upgraded the stock, expecting higher production and improving realizations. Zomato slips close to 5% after Jefferies has downgraded the stock, citing rising competition in quick commerce as a key risk. You're watching us here on Halftime Report. I'm Manglam Malu, with me Hormas Fatakia. We're out of danger, not yet out of woods, but it's a good feeling to see the Nifty up 125 points in the market after a big gash that we saw in yesterday's trading session as well. The Nifty Bank is outperforming with a gain of almost 1%. The mid-cap index feeling a lot better as well. So after the big drubbing that we saw yesterday, which some would call on an extreme because of the weakness that we saw in the rupee, some fears around the virus, etc. as well, now those fears are normalizing. The rupee's strengthened back once again. Now the street is believing that maybe things are not as bad as they seemed yesterday, and that's what the street is reflecting in its moves as well. Hormas.
Good afternoon, Mangalam. As you said, khatre se bahar hai, if you can call it that, but not fully out of danger, as you said, because that 200 DMA level still continues to be elusive for the index, which is still quite a distance away as of now from where the Nifty currently is. It's seen a bit of a dip at the start of the session, but since then it's been near status quo since the start as well for the index, or 120 points higher. The broader markets though are doing well, and there is plenty of stock specific action that is taking place, mostly on the back of brokerage commentary. The mid-cap index is up 0.9%. So is the small-cap index, that is also trading with gains in today's session. But we'll get to the broader market movers in just a bit. But one of the positives in today's trading session is the moves that you're seeing in ONGC, and that is on the back of that CLSA note. Now what CLSA has done is that it has upgraded the stock to a high conviction outperform stock. Now they also have increase their price target to 360 rupees. Now that implies a potential upside of around 40 to 42% from yesterday's closing levels. So what CLSA is saying is that this Eastern offshore, once it ramps up production to peak capacity, that will lift the domestic oil and gas output for ONGC anywhere between 10 to 20% by the end of the year, and that is a significant positive for the stock. Now the removal of the windfall tax is another positive, and since that has happened, it will enable ONGC to earn a higher realization compared to what it was earning earlier, provided the crude oil prices continue to recover, which they have been doing so. Before they took a pause yesterday, the crude oil prices were up for almost 5 sessions in a row. Now what they also say is that despite there are multiple triggers that are in favor of ONGC, the stock is still trading at a substantial discount to its average valuation, not only to its average valuation, but also the average valuation of its peers. Now, and also it is offering a very healthy dividend yield, which is at 6%. So all of these factors are culminating into CLSA saying that ONGC is now a high conviction bet for them. A buy recommendation, a 360 rupee price target, a significant upside from where it is currently, and it is showing up on the stock.
Absolutely. We take that point, Hormas. Thanks a lot for that. A big move is what we're seeing on ONGC, the top Nifty gainer. At the same point, at the bottom of your screen, you have numbers coming in for the second quarter from MobiKwik. And in case you're wondering why, after the end of the third quarter, we are getting numbers for the second quarter, because MobiKwik is a recent listing. And, it is as per the IPO regulations. The company has reported its numbers. Revenue from operations up around 43%. The bottom line continues to remain a loss-making company, so we'll keep an eye out on growth prospects for MobiKwik from here on. The biggest trigger for them is ancillary revenue coming beyond the platform of payments that they have already, so we'll keep an eye out on that as well. But let's move on and talk about a special segment. It is the jewelry space, and the special segment, obviously, Value Plus, that we keep getting to you time and again on Halftime Report. Why are we looking at the jewelry stocks? Because 2 days, 2 updates came in. This morning there was Kalyan Jewellers, and yesterday morning there was Titan. If you look at the intraday chart of both Titan as well as Kalyan Jewellers, you would see that Titan is actually doing well. After having seen some gains in yesterday's trading session as well, it is still holding with gains of almost 1.5%. Kalyan Jewellers, on the other hand, gained about 4% this morning, opened about 4% higher this morning, and from there has seen a bit of a slide and currently is marginally in the red, in the lower end of today's trading range. Is there a difference in their jewelry updates? Well, yes, there is, in the sense that Titan jewelry business grew at 26%, gold sales grew by about 24%, studded sales grew at 21%. So if you look at just the third quarter update coming in for Titan, it has been fairly strong, led by gold sales. Gold prices were higher. Kalyan Jewellers, on the other hand, the India business grew at 41%, overall revenue growth at 39%, same-store sales growth at 24%. Kalyan, by all means, for the last many quarters has been growing much higher than Titan. So why is it that the stocks are lower? Well, here's the reason. If you look at the last 1 year, Kalyan Jewellers is up 106%, Titan is down 5%. If you look at the valuations as well, Kalyan Jewellers last year was trading at half the valuations of Titan. But by this outperformance of Kalyan Jewellers is actually trading at a premium to Titan when it comes to the very near term. FY25 price to earnings, Kalyan Jewellers is 103 times, Titan is 101 times. 1 year forward as well, if you look at the growth that Kalyan Jewellers is posting, which is higher than Titan, they're trading at around 67 times, whereas Titan itself is trading at around 70 times. So that explains the divergence in the stock price move, despite the divergence in the growth parameters that the company has reported as well. But that's not to take away from the larger point that jewelry stocks are likely to do well in the third quarter, and that's what we're seeing. The likes of Senco, Thangamayil, PN Gadgil, even some of these others, the TBZ and PC Jewelers. Why is that? Because the third quarter will be strong, as it was expected to be. There was festive demand, there's wedding season, the rise itself in gold prices will do extremely well for them. That's the good part. What is it that we need to watch out for in the third quarter? One is margins, because there is higher salience of gold. Gold is typically a lower margin product. So could there be margins sustaining at a time when everyone is expanding, there is competition, and at the same time there is lower demand for studded jewelry because of lower diamond prices, the influx of lab grown. So revenues for all the companies will look extremely good. Will that translate into margins, etc. or not, is something we'll be watching out for. And for the smaller players who don't have a lot of unhedged or rather hedged gold, then there could be an inventory gain coming in because of the gold price rise as well. So that is one factor that I'll most definitely keep an eye out on. So that's about the jewelry space. But let's go back to the brokerage verdict and a lot of the brokerage related stock price moves that we have. Hormaz did speak about ONGC, but the one under pressure today is Zomato, because quick commerce, which was earlier an opportunity, is now looking like a competitive threat.
Indeed, and you spoke of gold jewelry right now, and all that was glittering is definitely gold, but Zomato, which glittered in 2024, might just see some bit of sheen being taken off in 2025. At least that's what Jefferies is saying when they downgraded the stock to a hold and the earlier rating of buy. They've also cut their price target down to 275, earlier target of 335 on the stock. Now what they're saying is that this quick commerce opportunity, which was a big opportunity for the players like Zomato and Swiggy, that is now becoming a concern because of the increase in competition, and that has become a worry for Jefferies on the profitability front for Zomato. And they're expecting 2025 to be a year of consolidation for the stock price, because the stock had more than doubled in value in 2024. Now they've also cut Blinkit's EBITDA forecast very sharply over FY26 to 27 and have halved their target multiple to 6 times. Now for Zomato overall, the Jefferies has cut its EBITDA estimate by 12 and 15% over FY26 and 27. The profit estimates have been cut by 17 and 18%, and the EPS estimates have been cut by 20 and 21% over a 2-year period. So a downgrade coming in for Zomato, the first in quite a while, because most of the analysts who still cover the stock have a buy recommendation on it, and it is showing up in the stock price as well, because that is among the top losers within the broader markets. All
right, so that speaks about Zomato. We'll keep an eye out on that one. But the NCLAT has approved Indiabulls Real Estate and Embassy merger. Indiabulls Real Estate, of course, now trades as Equinox on the bourses, is locked in upper circuit on the back of that news, which was widely expected. The stock was doing well this morning as well, but as soon as the news flashed on our screens, the bottom of our screen, it's up 20%, locked in that circuit. Ashmit joins into the details of that one. Ashmit, it was something that was awaited and now that's come about.
Indeed, it's been a long time coming. In the month of August of 2020 is when this merger had been announced. Since then, there were regulatory approvals that had come their way. CCI had granted its approval. The NCLT in Bengaluru had granted its approval in 2022. But in May of 2023 is when they hit the first hurdle in the form of NCLT in Chandigarh coming out, refusing to allow an approval, staying this entire transaction, essentially on account of concerns that had been raised by the Income Tax Department. That matter then traveled to the NCLAT. It has been argued at length, and as of this morning, the NCLAT has had the final word. The NCLAT has clarified that the appeal has been allowed by Indiabulls. This merger is to be has been green flagged. It can go ahead. The concerns raised by the Income Tax Department and other interveners has been set aside. So in doing so, the NCLAT is trying to put an end, try to put a quietus to an issue that has stretched across the last 4 years, sanctioning this entire transaction. Of course, this merger that takes place will translate into Embassy holding the majority promoter shareholding of around 45%. So that's the kind of structure that we're looking at. But is this the last that we've heard of it? It's important to bear in mind that the appellate tribunal orders can be challenged before the top court of the country, before the Supreme Court. So while this does put a quietus, this does give a green flag to this merger going forward, important to bear in mind, important to keep a caveat in mind that these orders may be challenged before the Supreme Court as well.
An important caveat there, Ashmit. Thank you so much for that update. Equinox India, formerly known as Indiabulls Real Estate, is now locked in a 20% upper circuit after that news. Time for a short break, but before we do that, let's introduce Growth Code, a special initiative by Grow and CNBC-TV18 with an aim of empowering investors and traders. Prominent investors and professional traders gathered at Grow's Trading Right event on the 9th of November last year to share their valuable insights and strategies. Now, here's the snippet of what Saket Ramakrishna, the trader and founder of Quick Alpha, had to say on the common trading scams that traders need to be aware of. Listen in.
How many of you have come across messages? Okay, you can take my service. I will give you 2 free calls, right? 2 free calls. Only when you make profit, you pay me out of that profit, right? So this is one kind of typical scam where he's simply going to give you buy call or buy put, right? If it works, he's anyways going to get the money because you're going to pay out of the money that you have made through it. If it doesn't work, no need, like he hasn't lost anything. He has just convinced you for a couple of minutes, right? So a typical scam now, just assume this is happening on a large scale. Assuming that on a monthly basis, I target 200 people, right? 100 people, I say, I will give you 2 free calls. If you make profit, pay my charges out of the profit. So let's say his charge is 3,000 or 5,000, right? So he gave me a call. I made 5,000 bucks, so the call went double. So he's going to charge me 5,000 from 100 other people. So 5 lakh per month is done, right? So this is one common type of scam.
Welcome back. On to some other buzzing stocks today. Zydus is one of them, and that is after the back of some multiple news flows. And there's some announcements related to a deal, some approvals that have also come in from the US FDA. Vinny is joining in to tell us more on that. Vinny.
Yes, so 2 announcements specifically that have come in for Zydus Live today. The first one is that where they've said that they've announced an agreement with CVS Caremark to add a few of the drugs in CVS Caremark's portfolio. Now, obviously, these drugs mainly which are added are targeted to improving glycemic control in adults and with type 2 diabetes. So some in sort of a treatment coming in for type 2 diabetes side. So we'll keep an eye on this one because the US market for this inhibitors has been around $10 billion in terms of value by around August 2023 when you looked at it, and this is according to the IQVIA data. So keep an eye out on this one, a big one coming in terms of strategy for Zydus in terms of the US market, especially on the diabetes front, and strengthening their portfolio for high quality products as well. Now in a separate filing also, Zydus has said that US FDA has accepted Sentinel's new drug application, which is for the drug CUTX-101. This is filing and priority review that has been given by the US FDA. Priority review for 6-month time period is what they've said. So this will boost in terms of earlier launches expected coming in on this front as well. Keep an eye out on Zydus on the back of both these announcements, important ones coming in for Zydus.
Important ones indeed. But Biocon, that's also a stock that you're watching out for today, up nearly 8% right now among the top F&O gainers.
Absolutely. Stock is buzzing away in trade today. Now we have an upgrade that's coming for Jefferies for Biocon. They've upgraded the stock to a hold from a previous underperform rating. Target price of 400 rupees. Previous target price was 280 rupees. So increase in target price as well. Let's not forget Biocon has seen a lot of positive triggers coming in the recent times, and that is what Jefferies is also highlighting, especially the Bangalore Biologics plant of the company, which has gotten a clearance from the US FDA. That's a key one to watch out for. Other than that, the approval of the biosimilar Stelara, that is also an important one and is expected to be launched in FY25, Feb 2025, I beg your pardon. And the growth visibility for biologics business, that has started seeing an increase, and that is why Jefferies is positive on this one. Other than that, triggers that they're keeping an eye out on, one in terms of Malaysia plant, when is the clearance coming in on that front, market ramp up for certain biosimilar drugs as well as semaglutide, a generic drug, what is happening on that front is key to watch out for, and approval of biosimilar of Aspat is an important drug for Biocon Biologics in terms of the move that we'll see coming in from this drug, and in terms of share for this drug is key factor to watch out for. In a separate news, also the company has announced an approval that has come in for the biosimilar drug of Stelara by the company. Now this is by the Japanese Medical Association, which they've approved this drug, and this will be commercialized by a Japanese company and approved for testing mainly for the drug in terms of psoriasis as well as arthritis, which is key factors to watch out for. So two news flows keeping Biocon a buzz.
Indeed, it's a good day for Biocon, 8% higher on the stock. Winnie, thanks a lot for that. At time for a short break, the Nifty still remains 100 points higher, stuck in a very narrow range. What happens and what are the charts indicating, and some trading ideas on the other side with Sachitanand Utekar of Trade Bulls. Stay tuned.
Welcome back. You're watching us here on Halftime Report. We're out of danger, but perhaps not out of the woods. That's exactly what the setup at midday is looking like when you look at the F&O space. There has been recovery. The Nifty is up almost 90 points. We have 400 points on the Nifty Bank, and the Nifty Midcap Index up almost 0.2% as well, though we're seeing some selling at higher levels. The good part is that the India VIX has cooled off. It's down about 6% after a 12% jump that we saw in yesterday's trading session. Upwards of 15 is where it moved. The advanced decline ratio, these lines are fairly parallel in today's trading session. That's telling you that there is some sort of stability that we're seeing. But are we out of the woods yet? Seems like not. Why do I say that? Because, the high on the Nifty today was 23,795 in the first hour of trade itself. Thereafter, we did not cross that. And the 200-day moving average on the Nifty is 23,900. So until we cross today's high and the 200-day moving average, we might not see a lot of short covering take place in the market. The second part, the Nifty Bank, 300 points from here on, 50,688 is where the 200-day moving average is for that index as well. So what will then lead the Nifty higher? We'll have to look at Reliance, because Reliance is one of the stocks which is holding on in today's trading session. If it moves further from here on, only then we can see the Nifty move higher. And the call writers are taking note of this itself. If you look at the 23,700 call on the Nifty, 160 rupees premium, they are hoping for some resistance around 23,850 to 23,900 as well, which is the 200-day moving average. So were the Nifty to cross the 23,900 mark, only then will we see these call writers being caught on the wrong side and cover their positions, and as a result of which we'll see a further up move on the market. The good part, however, is that put writing is come back at 23,700, telling you that there is support at 23,600 thereabouts itself. So the index from yesterday's low has seen a bit of a recovery. Does it go past that 23,900 mark is something we'll have to watch out for. But for now, the support seems to have come back. Individual stocks in focus. A lot of short positions added on PVR, Inox, after some up move that we saw in December itself, with some blockbuster movies coming in. A A lot of long positions added on ONGC and Biocon. There were some longs added on LIC, but now LIC is moved off the highs in today's trading session. And finally, keeping an eye out on Bandhan Bank, may enter F&O ban given the open interest action on that stock.
Your stock-specific action as well taking place within the F&O space. Mangalam, thank you for that. Now let's pose that 200 DMA question to Sachitanand Utekar of Trade Bulls, who's joining in now. Sachitanand, good afternoon. Thank you for joining in. You just heard what Mangalam mentioned, right? 200 DMA of 23,900. Does the index have enough legs to first get to that point to begin with? Because we are still a distance away from that. Once it does so, what happens next? And couple that up with your stock recommendations as well for the afternoon.
Good afternoon, Hormoz. Good afternoon, Mangalam. I think a couple of weeks back, we had the same discussion when the Nifty was trending to near that 23,800 mark. And even that time, the data was suggesting a sideways consolidation kind of a move. And, even today, if you look at the data, there's a meaningful support built up at 23,600. 23,650 kind of a zone. And on the higher side, it has to really close or give a decisive close above its 5-day exponential moving average, which is placed at around 23,780 bouts. So I think this particular range may hold for the day, but it is a good sign after a vertical decline that we have seen in the last 2 trading sessions. Nifty is showing some resilience and trying to build another support here. So probably we may see eventually the Nifty, swinging on the higher side. But as of now, I think it's better to keep a long short equation. When it comes to Nifty, I think the trigger on the higher side is placed at 23,830. The moment we see the index, trending above this level, we may see a very strong short covering move unfolding, which may push the Nifty again back towards 24,000. But on the lower side, I think the support at 23,700, 23,600 band would be critical, at least for today's trading session. In case if this particular support is held, we may see a strong swing on the higher side. When it comes to stocks, I think it's better to keep a long short equation. At the beginning of the series, we have highlighted that the real estate space could be under pressure. Last time we recommended a short call in Godrej Properties. Right now, we are recommending a sell call in DLFs. Now, if you look at the weekly structure, the stock has been oscillating within the range of 900 on the higher side and 765 on the lower side for almost 9 months now. If you look at the weekly RSI, it has started drifting below that 50 mark. Plus, if you look at the daily ADX, it has given a fresh breakout above the 25 mark. Now, this combination is a sign of good momentum, and probably we may see a breakdown in this particular counter soon below the level of around 800. And that's why we are recommending building fresh short positions up to 810, keeping a stop loss at 822. And eventually we may see the stock swinging lower towards 765. On the higher side, on the bullish side, we like the setup of Lalpath Labs. Now, even here, if you look at the weekly structure, it was oscillating within this particular range of 3,100 on the higher side and 3,000 on the lower side for almost 8 weeks. Now, today it has moved confidently above that 3,100 mark. It has created a lot of pressure for call writers. And that's why we are seeing an unfolding of a fresh bullish impulse, which may extend up to 3285. And that's why we have also recommended, buying in this particular counter to our clients. The stop loss can be placed at around 3055 on a closing basis. Any declines towards 3100, long positions should be added for a pattern target of around 3285.
All right, Sachitanand, thank you so much for joining in and sharing with us your views on the index and specific stocks as well. By the way, the numbers flashing on your screen, the first earnings of the third quarter, GM Breweries, profit declining for around 4%, the revenues up by almost 5%. The stock, though, has slipped to the lows of the day, almost 2% lower now as we speak. Revenues at around 166 crore, profit almost flat at 22 crore compared to 23 crore last year. But the street has not taken it too well, and the stock now at the lowest point of the day, 2% lower. We'll get to the EBITDA and margin figures as well for GM Breweries, but for now, the first earnings of the December quarter, GM Breweries, we'll get you more details on that as well. We'll take a short break. Up next, we'll be joined by CS Vigneshwar, who is the president of the Federation of Automobile Dealers Association, to discuss the December auto sales and a lot more. Stay tuned. Welcome back. Shifting focus to the auto sales now for the month of December, where total retail sales were down 12.5% on a month-on-month basis. The commercial vehicles slipped by 12%. And in fact, as well, now, in fact, the Federation of Automobile Dealers Association expects for sentiments for January as well to be cautiously optimistic. We are now being joined by Mr. C.S. Vigneshwar, who is the president of the FADA, who is joining in now. Mr. Vigneshwar, good afternoon. Thank you so much for joining in. You still remain cautiously optimistic for the month of January as well. If you could break this down for us, what is driving the caution and what's driving the optimism for you?
I think what's driving the caution is what's been happening the last year. It's always been a stop-go. Every month, there's been some kind of a challenge, but the resilience of the market with the OEMs and, of course, the dealers have been working together to meet these challenges. The optimism stems from the fact that it's been lower than expected December. So we also feel that quite a few spillover of sales has actually happened because of postponement of decisions by customers. There's also a lot of optimism happening because the first quarter we feel is going to be good. This is due to the auto show, where quite a few new launches are going to be done and also product refreshes are going to happen. Few customers have also postponed their buying decision in general because they want a 2025 vehicle.
If you could give us a sense of what the inventory levels at the dealers are at right now and how do they compare with this time of the year in general? What does that tell you? Because there has been a fair amount of discrepancy between what the companies report when it comes to wholesales and the retail Vahan data as well. So we just wanted to understand that gap.
We simply go by the fact we compare SIAM data along with the Vahan figures. There are quite a few vehicles which are still lying at the dealership lots. It's much better than what it was 4 months ago because we were at nearly 90 days of stock. Right now, we predict we are at about 55 days. The stocks have been coming down. I think the OEMs also have taken cognizance of this and they've been reducing the dispatches. And also we've been aided by good retails in the last 4 months. But however, the buildup of stock had happened nearly 5 months before October. There was a slow buildup because of various reasons. But right now, I think it's only makes business sense that we start reducing stock. We as FADA and most of the industry OEMs have also recognized.
We've managed to. All right. I think we got a scrambled line, sir. So we'll just try and repatch that once again. You said that the inventory at the dealers right now is at 55 days as against 90 days earlier, right? When the cycle's extremely good, does it have the potential to go lower, or do you think this is good enough for dealers to actually start ordering more? We just wanted to understand that.
I think we have a potential to go lower, probably in the next quarter, 2 or 3 months, which is very important for us to start reducing this stock. 21 days is what we need to get to. And the 21 days is calculated regarding keeping in mind factors as customer's choice, as well as factors like the gross margins which are given to us as dealers from OEMs. So keeping all this in mind, there is a good chance for this reduction to continue and take it below a month, which would be a first step to get to 21 days.
Mr. Vigneshwar, what about the commercial vehicles space? Because that is the one that has seen some bit of sluggishness over the last few months, and you're expecting this to recover in the first quarter of this year, of the calendar year, considering fourth quarter of a financial year is generally stronger for these commercial vehicle for the commercial vehicle segment as a whole. What do you expect, or what could be the likely factors that would drive this recovery for the commercial vehicles?
The commercial vehicle segment has had a very, very small growth over the last calendar year. For example, it is about 0.7%. This was due to the fact that a prolonged election followed by various floods and droughts in different parts of the country. Sometimes these floods and droughts happen across a few months in the same state. So this doesn't augur well for CVs. And also the fact that the government spending in infrastructure has not yet, the tap hasn't opened as yet. We expect this cannot prolong forever. And this quarter, there would be enough government spending in terms of infra, which would also have a trickle-down effect on the PV and two-wheeler sales later on. So we also been seeing a lot of large deals have been not inked, but a lot of large deals in the commercial vehicle segment have been going on at dealerships. And this gives us a very positive sign that the commercial vehicle segment would do well next quarter.
Right. And what about two-wheelers? There has been this influx of EVs at the two-wheeler level, even though, it does not impact the IC engines of four-wheelers as much. There is still that discrepancy there, but it's a lot more in two-wheelers. How is that likely to pan out going forward? Do we see a tremendous shift out there? Where does that mix stand at?
See, even when you take two-wheelers into consideration, I think it's only about 6% overall. So when you take 6%, I think there's a lot of room for it to grow. Apart from EVs, we also have CNG, which has become a choice for the customer. And I believe a lot of customers would come into the CNG bandwagon too. So alternative fuels are important, apart from the petrol, which is usually there. And they would play a very big role in terms of reducing our dependence on oil imports. So yes, there are certain other factors also to be taken to see whether holistically in the life cycle, whether these products make sense environmentally, but they certainly will go on to reduce the fuel bills. The EVs are quite nascent in our country. It's yet to take off, but more and more of the scooter segment, we are seeing them shift over to the EV segment. We're also seeing some new entrants into the EV motorcycle segment with enough range to take care of the customer requirements. The EV is going to be a strong growth story in the future in India.
That was my next question actually, Mr. Vigneshwar, because the Auto Expo that's lined up, there are plenty of EV launches that are in the pipeline. Now, is electric vehicles actually a significant part of the dealer inventory currently? Or do you expect that to take a significant shift in 2025 as majority of the inventory now turns into electric vehicles as more variants get launched?
The EV industry for passenger vehicles, if you're asking, is about 3.5%. So it's still very, very small. It will not make a large impact on the inventory. It will be probably similar to what the market shares are in the lots of the parking lots of dealerships. But what's important to note is that more and more companies want to participate in the EV story. It used to be a couple of companies 2 years ago. Now it's a handful. And I'm sure this year and the year after that, every company who is serious about the Indian industry would have some kind of an EV product available. But EV may not be the only alternative fuel available. You also have CNG, you also have hybrids. So all these things would also play an important role in the alternative fuel story of India. And we already had a couple of launches towards the end of last year, but yes, they've had great responses. And these deliveries are going to start happening only in the first quarter of this year. So we yet to see that. There's a lot of excitement. There are a lot of products coming in, especially because of the auto show. And I think the EV story is a very strong story and a strong bet for the future.
All right. While it may be the strong story and strong bet for future, we were just wondering whether it could eat into the incremental sales of some of our listed companies as well. Though a couple of the two-wheelers have gone ahead and made inroads into that and beating the earlier leader as well, case in point Bajaj. But we'll leave that discussion for another day. Thank you so much for joining in and giving us a very near-term outlook for the auto sales. Currently, the inventory at 55. There is still scope for it to go to 21 days as against 90. So we're getting better, but still some way to go. Thank you so much for joining in. Wish you a happy 2025 for the industry itself. May the auto sector do well. Take a short break, come back on the other side. We get you more on the markets. The mid-cap index now sitting with a gain of almost 1%.
Welcome back. The Nifty continues to remain where it is, 110 points higher as we speak, but there are plenty of movers in the broader markets. And start off with Intellect Design Arena. That stock just came out of the first stage of the short-term ASM framework, and that is now up 11% in today's trading session at the highest point of the day. Kirloskar Brothers is another one. That stock is up 9% in today's trading session and on significant volumes as well. PTC Industries, we just spoke to the management recently, and that stock too is now nearing that mark of 17,000 and is up 8% in today's trading session. But on the flip side, an outperformer of recent times, where we've been speaking about not PTC India Financials, PTC Industries was the stock that I was referring to. That stock is now nearing that mark of 17,000 rupees, and that is trading with gains of 8% in today's trading session. And ITI is the one that I was talking about. That stock is now locked in a 10% lower circuit in today's trading session after multiple days of 15%, 16%, 18% moves on the upside. The stock is now locked in a 10% lower circuit. The circuit filter was also revised on the stock down to 10% from 20% earlier. So ITI in a lower circuit, seeing some profit booking after the moves. Also, let's just repeat what we have been all through last week, that it has very little free float in the market. On the other side, then Manisha Gupta joins in with Paul Bartholomew, the senior analyst of metals at S&P Global Commodity Insights. Stay tuned, take a short break, back on the other side.
Welcome back, and joining us on the show is Paul Bartholomew. He's senior analyst at metals at S&P Global Insights. Paul, hi, good to have you. Wishing you a very happy 2025. While the last year was quite mixed when you look at metals, this year hasn't started on any great shakes. I mean, clearly the markets are waiting for direction from what US does. How are you looking, especially at steel and iron ore prices? Because we've started the year with sharp declines for iron ore, trading below $100 a ton. Let's start with that one first.
Yeah, well, Happy New Year to you. It hasn't certainly, it's sort of carried on, I think, some of the negativity that we saw at the end of last year. Obviously, it's sort of still early days, and even China has a couple of days off over the Christmas period. But I think there's been another government meeting, one of a series of government meetings that there have been over the past past 12 months that have all kind of ended in a little bit of disillusionment for the market. I think when these meetings come around, and there's obviously the most important one probably is in March, which is the big annual government meeting. There's always hope from the market that the government are going to do more to inject some sort of metals and steel supportive stimulus measures, but we might see a bit of reaction sometimes for a couple of days, but then typically the prices will sort of decline again, and we'll see that kind of bearishness. But I think the problem is there's a couple of things really. There's obviously the challenge of the very, very weak property sector, and we expect that to stay weak again this year. I think the government really just going to be focusing on trying to stabilize things, more than anything. And of course, there's that other big factor, the incoming Trump government in the US. So I think everybody's kind of a bit watchful and circumspect at the moment, just waiting to see, what's going to happen. But yeah, certainly not a mood of buoyancy at the moment, sort of, I think globally and particularly in China.
Oh, well, absolutely. If China was under a lot of pressure in 2024-25, brings in Trump as the new president as well. So what's your sense when you look at this quarter itself? And of course, much of the policies from US would get cleared by end of Jan is what the markets are looking forward to. Overall, a bigger picture, global picture, how does that seem to you? Do you see China property sector finally picking up? Do you see metals demand growing? While we are talking about steel, there's a lot of conversation on green steel as well. How do you see that?
Yeah, well, I mean, I was talking to my colleagues in the US earlier today, and I think, we're constantly as a company thinking, what should we do? What should we what sort of analysis and pieces should we do on the incoming Trump sort of government? And I think we've just really decided just to kind of wait and see, because the thing invariably happens with Trump is things happen very quickly. So I think, within a very short period of his inauguration later this month, we should get a clearer picture of whether these tariffs that are, obviously it's not just countries like China in the US's sights potentially, but the near neighbors, Canada and Mexico, etc. Whether these are just going to be sort of bartering tools, bluffs, or whether there's going to be some reality. But I think one of the things we have seen, certainly after the US election last year, was there's been a lot of activity people trying to export manufactured goods. I think it sort of pulled forward a bit of activity in anticipation of potential tariffs. And of course, if that happens, it's really going to disrupt global trade flow. So it's going to have an impact on things like EV supply chains in the US, which will have an impact on copper prices as well. But so much of a lot of the kind of steel and metals industry has been set up, well, some of it's been set up around the other side of the Mexican border as a kind of way of, I guess, when China was sort of shut out of it. Well, can Mexico and China be kind of locked out? I mean, that's obviously going to have a huge impact, really, and potentially an inflationary impact, in the US. I think in terms of green steel, I think still most of the activity is taking place in Europe, but we've seen, quite a few projects being walked back on, some big hydrogen projects, even in Australia, but certainly some of the green steel plans. Not saying that the carbon targets are the same, but by specific companies, we've seen them kind of walking back a little bit on some of their project timelines, and that's just because the market's very, very weak. When margins are weak and demand has just consistently been weak now for about 2 years. It's very difficult, I think, sometimes to make big structural changes around green steel. So if Trump comes in and is sort of fairly negative around I guess some of those environmental issues, again, that could be just something else that kind of pushes back some of that progress. So I think we're very much in kind of wait and see mode, whether we're going to see some of these announcements happening quite quickly, or whether, as I say, it could just be sort of bargaining chips, and it might not be quite as dramatic as potentially at the moment.
Okay.
All right, we take that point. Thank you, Paul, for joining in. Manisha, for taking us through with that conversation on the metals outlook for 2025. Meanwhile, the market seems to have picked pace once again. A bunch of stocks which are spiking. Reliance continues to power ahead for the bulls. The Nifty is now just about 60 points away from today's high of 23,795. Let's see whether we go ahead and cross that today's high as well or not. And ICICI Bank is the other one which is actually taking it higher, closer to 50,350 for the Nifty Bank as well. The mid caps continuing their march forward, up around 1% for that index. Dixon Tech is the other one from the broader markets, which is currently moved to the high point of trade. We'll keep an eye out on the markets as we move towards the close of this show halftime report. Broader markets doing a lot better, and we do have a bunch of stocks which are now making an attempt at recovery once again from the day's low. Take a short break. On the other side, we have the team of Business Lunch taking all the market action ahead.